It is another beautiful Friday afternoon, and I'm so excited to be welcoming you to today's episode of our program, Financial Inclusion and Economic Development, of course, on Amorgate Radio Communications. Oh, and I remain your ever faithful host, Titilola Ogunshono. It's good to have you join us today. Last week we commenced, the introduction of a very engaging, insightful topic where we started our discussion on the relevance of financial inclusion to small and medium enterprises, SMEs, growth in developing economies. And to do justice to this interesting, intriguing, and very germane important topic, we had with us Mr. Ibrahim Agiri, who looked at the concept of financial inclusion. He brought very practical examples. I enjoyed myself because he even asked me questions. It was quite an engaging time for me. I'm sure you all enjoyed it as well. And he went forward, to talk about the specific financial challenges faced by most small and medium enterprises in developing economies, developing nations, developing countries. And we mentioned quite a number of factors, which included limited access to credit, inadequate financial infrastructure, and among others. He also mentioned non-financial challenges faced by the SMEs in developing countries, where he mentioned the fact that most economies in developing environments are usually characterized by low level of financial literacy, which it could actually be a very big bottleneck or drawback to the growth of SMEs, because when you don't even know how to manage how to use the digital tools, how do you want to leverage all the benefits of financial institutions, okay? And we also looked at how we could deploy financial inclusion in resolving these challenges that he mentioned. It was quite an engaging session, and today we'll be going forward to the concluding episode of this interesting, intriguing topic. So thank you so much, Mr. Agiri, for joining us today again.
Yeah, thank you very much, Ma, for having me here once again. I really appreciate for having me here once again.
All right.
I really appreciate that. And
okay,
I think
this
will be like a continuity to like what we did last week.
Okay.
So it is my pleasure.
All right, thank you so much, Mr. Ibrahim Agiri, for honoring us with your presence today. Okay, and it was interesting that I went to statistics. Another dimension we'll be looking at today is regulations. How can regulations help us? And I found very interesting statistics. And that is the typical case of Kenya, as at 2011, according to the Center for Global Development report, 42% of adults in Kenya have a financial account of any kind. But according to the Global Tax database, that number increased significantly to about 75%, from 42%, to 75%, okay, and it was much later increase, and that is including 63% of the poorest to fifth in Kenya. So if we look at where they were coming from, from 42% to 75%, according to the recent report that I saw, according to the Findex database, that's a whole of 42 to 72. That's an increase about 33%. That's quite a lot. And I tried to look at what were those factors, those measures, approaches, those policies that actually help them to achieve this great feat. And what I saw from another report, the same report, was that one of the approaches that was deployed according to this report is the restrained approach of its regulators. And what they tried to do was that they prefer to set exposed rules. They prefer to set rules exposed. That is, they set rules as services and that provides for providers evolved. So they were not setting before that process, and they were not threatening. They didn't deploy a strict ex-ante regime, which could later prove to be very ineffective. So looking at these figures and the fact that the report gave us that insight, that one of the things that helped Kenya was, was regulations and the timing of the regulation and the approach to to developing these policies. So I feel that on this note, okay, it's important to also look at another factor, the regulatory environment. So on this note, I'm going to ask you the first question, Mr. Ibrahim Agiri, and it's this: can regulations be used to strengthen financial inclusion and inclusive access to credit?
Yeah, thank you very much, Ma. That is actually a big question, what I would call a big and good questions per se. That is, can regulation be used to strengthen the financial inclusion? And yeah, I will say yes to that question. But saying yes, they need to be put in place. So regulation, as we all know, that regulation play pivot role in order to inclusion and access to peace, which Nigeria is also inclusive. So, and for this to be actualized, there must be a kind of truthful design and implementation. That's very important. So not that we are just going to design alone. This regulation that we are talking about, once we design these regulations, are we ready to actually implement those regulations? Those are the questions we need to ask ourselves. So looking at this now, let's start from here. How the regulation support the financial inclusion? So this regulation will actually support the financial inclusion in numerous ways. So for instance now, part of the ways is just that creating an enable legal framework. So this regulation will actually assist in such a way that it will create a kind of legal framework in the financial settings. So for instance now, we are looking at this now, government can try much as possible, like government and regulatory bodies can establish a national financial inclusion policies and strategies. Yes, those are the things that we can actually use, that can actually help as well. For instance now, let's make reference to part of the strategy being used by the Nigerian government, part of the regulation being used by the Nigerian government through the Apex Bank, which is being called the Central Bank of Nigeria, when they launched the National Financial Inclusion Strategy, the NFIS. So we can see that through these strategies now, these have actually increased the number of Nigerians with access to financial inclusion. We can now see the part of the strategy now. We can see. So based on the question you asked, man, that you said, can regulation be used to strengthen the financial inclusion? Yes, it can be used. So like based on the reference I made now, that part of the strategy being used was in Nigerian was the National Financial Inclusion Strategy. These are, without no doubt, have actually increased the number of Nigerians that have access to formal financial settings. And these strategies alone, is not only like more of like regulation, but it is strategy being implemented in order to define the role of bank, the fintech companies, financial technology companies, and also the mobile money operators. Even the cooperatives were not left behind. The cooperatives were not left behind. They are also inclusive as well. And all that, the ecosystem. So we can now see that creating an enabling legal framework, this will actually help. So part of the legal framework is establishing the national inclusion policy. So which part of it I actually cited an example, the National Financial Inclusion Strategy, NFIS. And also, here, there is something very important that I think the Nigerian is also trying in that aspect as well. This issue of KYC, know your customer. So knowing your customer, it is also a kind of strategy as well, a kind of regulation. So the government should try in such a way that know your customers, the KYC requirement, it is also important. So the financial inclusion now, part of the problem that we are facing is this issue of one of the biggest problem we are facing in the financial to the financial inclusion is the lack of identification, that is ID card. I think
Okay.
The Nigerian government also tried regarding that, because now the Nigerian have tried much as possible through our major the NIN, the national
Okay.
identity number. So Nigerians have been using that compared to in olden days where someone will just pick an ID card being used in his or her shop in order to go and open a bank account. So that is not an authenticity in what we can actually qualify to be a kind of identification. So one of the biggest problems in the financial inclusion is the lack of identity. So this identity, Nigeria is also trying in that aspect, and this our BVN of 18, it is also a regulation. So this requirement as well is the lack of people doesn't have this identity. So I think part of the regulations now,
Okay.
so part of the regulation is to build this identity. So in such a way that everybody will have access to all these kind of identity. So that will also be a kind of strategy, and that will even help people to even know their customers. So for instance now, the CBN Tier 1 bank account, that one only required a kind of passport and basic information. So with that now,
Okay.
we can see that even with that identity, for someone who doesn't have a kind of identity like maybe driver license, the identity card, the NIN, or the voter's card or international passport, even if it's just a passport and personal information, you can open a Tier 1 bank account. So with this now, we can see that this strategy will actually motivate people to open bank accounts, but it will reduce their limitation in terms of maybe access to credit, the amount of money they can save. So with this now,
Okay.
regulators can actually introduce a flexible and risk-based KYC requirement. So by doing that now, so even all this fintech as well, once you just open the account, they will place you on Tier 1. So that Tier 1, they will tell you that with just 50,000, you can only save or withdraw, I think 50,000 or so, all these per
Mm-hmm.
day okay. So with
Mm-hmm.
that, you can see being flexible, this will actually enhance the financial inclusion as well, rather than we just saying that okay, you know that the identity, they were very important. So we just saying that okay, this identity, oh, it is a must. But why saying it is a must? Why can't you just make it in such a way that even a student who is not able to register, or an infant that couldn't even register for a sophisticated means of identity like driver license can
Okay.
open an account, whereby it will now be flexible, but there should be a limitation. So those are the part of strategy that the government have been using as well, and Nigerian is really trying in that aspect as well. This will
Okay.
actually make it possible for the unbanked, especially those in rural area, to open bank accounts. So, so with that, and also we are looking at the regulation and as well the access to credit,
Okay.
regulation and access to credit. So consumer credit regulation, it's also a kind of strategy that can help, even it is really helping. So this regulatory body can set like lending guidelines to ensure
Mm-hmm.
transparency, avoidable. If you can make reference to, let me make reference to what I said last week, where I said the major reason why some people don't even engage in maybe these credit assets of a thing was because of the ambiguity, that the rigorous aspect that people pass through in order to like obtain loan, in order to
Mm-hmm.
obtain loan. So we are looking at that now. So this regulation, so the regulation of consumer credit regulation is also a
Okay.
measure as well. So this can be used to strengthen our financial inclusive. So the regulatory body can set a lending guidelines to ensure a kind of fairness and affordability. For
Okay.
instance now, let's say cap interest rate protect the predator lending. So when there is a kind
Mm-hmm.
of interest rate that it is actually there is a cap on it, that okay, so interest, so the interest rate should not be more than 10%. So all those predators in the credit market, that will actually give them a kind of caution. Yes, that will give them a kind of caution. And also as well, license should be given to more microfinance bank, because most of these microfinance bank, They were even the banks. Even doctor, I can tell you that some people they don't know that financial institution, our commercial banks, they give
Okay.
credit, give loan. Some people doesn't know, most especially in rural areas. Some people don't know that even banks like Access Bank, UBA, they give loan. So they actually have much interest in all this microfinance. They tell you, OTFL or Lapo, sorry for using that kind of
It's okay. It's
verbal
okay.
language. So that kind of language. So so things like that now. So part of the regulation is just like giving kind of license to all those microfinance bank and the fintech. That will actually goes a long way. So for instance, now CBN also did something, the license of microfinance bank. So to serve the low income population, that also helps. Do you know number of people that through Apple and other microfinance bank, do you know number of people that have been using the financial services? Yes, some people only have account with the Lapo, most especially those in the rural area. So through that process now, those are the part of strategy that I believe that can be used in order to regulate these financial inclusive.
Thank you so much, Mr. Giri. Is a whole lot that you have mentioned. Okay, yes, you said that to the answer. You said to the question I gave. You said yes, regulations can be used to strengthen financial inclusion and inclusive access to credit. And you mentioned some things that are quite interesting that the first is to create an enabling legal environment, give the right framework, creating the right environment so that our legal processes can work in a timely manner and should be all inclusive. I mentioned the national inclusive, policy, the national inclusion policy, and the national inclusion strategy. And you mentioned the role of the bank. And you said something that was quite interesting, that is the ecosystem. That yes, Nigerian government has even gotten it right. Nigeria as a developing nation in terms of the KYC, they know your customer. So definitely, we are saying that there should be more laws, there should be more policies that would be directed, that should be specific at getting more people into the banking space, and also so that SMEs, those within the low income level, the micro businesses can have access to finance. And I like what you said about that one major issue again was the lack of identification. Well, the way forward, like we always like to say on our program, it's not about the problem, but also the way forward is that we have the NIN, the National Identity number. We also have the BVN, and we said it's simplified, which is interesting. You need your passport, and just one or two few information to be there. And of course, we also know that limiting factor, like you said, is we have the tier one, just passport. You can open your account with the likes of the fintech, the OPay, the Kuda, the Lapo, but it also had restriction in terms of what you deposit and what you can withdraw. And you also mentioned something I like about the consumer credit regulations, and you said that one major drawback, which you said even on your last episode, why SMEs do not have access to credit, is that the rigorous credit regulations, the process, bring that, it's always quite rigorous. And so there should be more, are you saying, is it right to say what are lending guidelines, the lending procedures to be more flexible, adaptable, to be more responsive? Is it right to say that's what you're talking about, Mr. Aguirre?
Yeah, that is very important. It should be very, very much more flexible. Yes, it will be very, very, very much more flexible, because we know that in Nigeria there is a high level of illiteracy. So we making it not to be flexible, we actually giving people that kind of mindset that they don't even want to engage in any financial activities at all, any financial services related activities. They don't want to engage. So by making it much more flexible, it is very important. So we shouldn't make it to be too much restrictive. So and then we need to know that while we are fighting in such a way that we want it to be flexible, we should also be conscious of security wise. Yes. Once we are conscious of security wise, if governments and through the agency that were involved, all the stakeholders, they tried much as possible that as they are fighting through the flexibility, they are also fighting through the security aspect of it. That will really help. For instance, now let me make reference to the part of the financial inclusive strategy that was done in Kenya when they
Okay.
actually launched M-Pesa. Yeah, it is
Professor,
part
yeah.
of yes, when they launched M-Pesa. So when they launched this actually enabled millions of people in the rural area to have access to it.
Mhm.
So one they part of what they did was they make it to be so much flexible. Even despite
Mhm.
the fact that those who were illiterate, they easily adapt to this thing. So through that aspect, they actually made a lot of things and make people to be incorporated to be using the financial services. Also, India as well in 2014, they also did so, whereby they make use of, even India, what they did then was they don't even make use of a kind of English name or formal name to name the strategy. They make use of their local name to do that, so that even when people hear that local name, they will actually, it is part of the flexibility strategy. They call it their Prada Mantri Jandaha Uganda. Yes, if I'm right, that is what they call. It was launched in 2014. And based on statistics now, that has shown that over 500 million bank accounts were opened since 2014.
Mhm.
You can see that it is actually massive. So for
Mhm.
over 500 million bank accounts to have been opened since 2014, even that is even more than the population of Nigeria. And we know that many India, they are more than a billion. They are more than a billion. This shows that this is part of the strategy. So making it so much flexible, it is something that is very important. Yeah, it is very
Okay.
important. So far
Thank you
it
so
doesn't
much.
have any security measures. So it is very
Okay,
important to do.
there's no security risk, so it's important
Yes.
that we are responsive. And from what you've said, it means that every country would have to investigate, carry out, their own survey. You have to investigate what works for your country. Okay, look at the peculiarity of what they did in Kenya, that what M-Pesa worked, what they did in India, localization, of their approaches, of their measures also work for them, having about 500 million within the financial space. So it means that from what you have said, every country will have its own peculiarity, you have its own demographic, you have its own cultural, inner cultural practices. So are you saying it's not a one size fits all approach, that each country would have to find out what would work for each his country?
Yes. That is what every country will do. They have to look for a strategy that will actually favor and that can yield a positive solution. For instance, now let's look
Okay.
at it now. It will be much more ideal for we in the global south, we the developing world. Now making use of, we can only copy the template of the global north, the developed world. We can
Mm.
only copy their template. So, but we copying their template doesn't mean we have to utilize it directly in such manner because they've gone so far.
Mm-hmm.
So we too, we need to start somewhere. So because what is it is more of like a drum, all this drum, it will be facing one side.
Okay.
We are facing this side, so they are facing this side. So every country should try as much as possible to ensure that they carry out a kind of necessary survey, bring out what can actually financial in every
Okay.
country. So what is good for Nigeria might not be good for other country, what is being used. So how can we do our own in order to form it as their rules in order for you to engage in financial inclusion, which we may not have here. So obviously even someone that doesn't go to school in advanced world like the United States can make use of bank, even can actually operate ATM because everything was programmed with their language, which is
Mm-hmm.
English. So we now looking
Okay.
at Nigeria now, we now saying that okay, we want to adopt that template fully. That would not really help. because
Okay.
we have our own local language. So our own local language can't actually be used by those people who don't have the privilege to go to school. So we have
That's very big. So we need to localize, see what works for us. And that also, Mr.
yeah,
Pierre, that also reminds me of what happened in telecommunications. Okay, before it evolved, now if you want to call, they'll tell you to listen to speak to our customer service agent in
uh,
English, press 1. To speak to our customer service in Yoruba, press 2. In Hausa, press 3. Or in this one. So it means that we now understand that that will make more people come into that space. Because if I don't speak English and what I speak is Yoruba or Igbo or Hausa, the main tribes in Nigeria, it means that you have excluded me. That was people really had that kind of opportunity. So what you're saying that in terms of financial services as well, in terms of policies, that we should also look at policies that will speak to our peculiarities as a nation.
yes, ma, yes,
Thank
ma.
you so
That is very
much.
important.
Very interesting. I always say that it's always an engaging, insightful episode. I always enjoy myself when talking with Mr. Agiri. Okay, thank you so much, Mr. Agiri. But I would want to appeal to you that for the sake of our listeners, could you kindly break down these challenges, the social cultural barriers, challenges, institutional and inadequate infrastructure that you've mentioned?
Oh, yeah. Thank you very much, ma. So, like I was saying, I said the issue of inadequate infrastructure. So, and we all know that in the not only the financial sector, even the telecom, we all know that the financial sectors and the telecom, they work hand in hand, because
Okay.
as the financial sectors were providing us with their services, which is the financial services, likewise the telecom as well were giving us internet facilities. So one of the major challenges is inadequate infrastructure. So this our poor internet connectivity. Yes, poor
Okay.
internet connectivity. So it is part of the major problem that we are actually facing. So
Okay.
that is a kind of major problem that we are facing. Yes, it is a major problem that we are facing. So in this aspect now, so looking at this now, if there is a kind of measures in order to ensure that, okay, even if we can eradicate this issue of infrastructures deficiency at once, it should be something of minimal. So many communities, they lack internet ATM network. So with that, some people will tell you that they can't use internet banking because they are scared of the this issue of network glitch. So with that, that is a part of the problem we are facing. So mobile money operator now, they couldn't even function well in a village that there is no network. There are still some village in this Nigeria that they don't even have network and electricity. So how do you expect even both the commercial banks and the financial technology institutions, they couldn't even operate in such area because no network, no electricity, internet facilities is zero. So you can see that is the major challenge. Another one is issue of financial literacy. So developing countries like Nigeria, we are facing low financial literacies, whereby many individuals, especially those in these rural settlements and low income communities, they lack basic knowledge. They actually lack the basic knowledge. Can you hear?
Yes, please go ahead. Please go ahead. It's a bit noisy. That's why.
Okay. They lack they actually lack that financial literacy. So
Okay.
even with financial services, if this financial service still exists, many may not use it effectively or may even mistrust. So some people may have this issue of mistrust in the financial settings, whereby they should tell them they are still doing that. If you should tell them that the financial services not limited to the rural area alone, even in the urban center, if you try to tell them that most of these financial institutions, the financial technology like all these OPay, PanPay, not that I'm actually patronizing them or advertising for them, but even if despite the fact I've been telling them that they were being insured by the NDIC, National Deposit Insurance
Okay.
Commission, they will still tell you that, oh, they can't use it. So this issue of mistrust, it is actually is linked to the low level of financial literacy.
Mm.
Yes, compared to the developed world, whereby some people a month they don't even hold a physical cash. Is it those that they even have both credit and debit card? So
Mm.
some of them don't even trade with any kind of physical cash. So those are the part of challenges we are facing. And there is another issue of part of the problem we are facing is the regulatory and bureaucracy barriers. Yes,
Mm.
is it. Do you know the kind of challenges in terms of this regulatory aspect and bureaucratic that many institutions were faced before they were being given licenses? So
True,
this
true.
regulatory, you mean that this thing has to be what? It has to be thorough. There should be thorough process because before we can give any institution any kind of license to operate. But in the developing world, there have been a kind of bureaucracy and rigid regulatory process, and also corruption is also affecting that. So with that now, that will actually affect the financial inclusion, and also overregulation can choke innovations. Yes, it is very important. You need to know that overregulation can choke innovations while underregulation itself can actually expose users to fraud. So you can see ma we need to balance it. So when you overregulate it will choke innovation. So when you underregulate that can even create way for fraud and any kind of abuse. That was why I said there should be a kind of balances between the two. So the under-regulation and over-regulation, we need to use it in such measures that, okay, we need to balance everything, that this thing should not be over-regulated and it shouldn't be also under-regulated. So that is also part of the things I actually have. And then again, funding and resource constraints, that is another thing. That's another challenge. For instance now, the financial inclusion program require large investment in technology, training, infrastructure and monitoring. For instance now, there are a lot of telecommunications companies in Nigeria. Don't even let me to actually say their name. Like we all know that since when they've changed their ownership, that is I mean being sold, they've been facing this issue of network glitch, whereby those people that make use of their services for banking activities, they've not been even using these banking services. That is, they are using their own negligence due to service deficiency to affect those who were making use of their services to power their financial activities. So with that now, funding and resource constraint is part of the major problem that we are facing. So for any institute or an individual to invest in technology now, invest in financial technology now, it has to be something of large investment, and there is no any kind of support from the government. So many governments in the developing economics face budget limitations. So with this, they couldn't even help them. So with that is also a part of challenges as well. Also political instability. Let me round it up from there. So political instability is part of the major problem that we're actually facing. So change in government and also abandonment of existing policy. So when new government come in on board, the existing policy is either they eradicate it, they actually eradicate it or they abandon it. So those are the kind of problem that we actually that those are the kind of challenges that the financial inclusion activities were being faced in the developing world, which our dear nation Nigeria is also inclusive. So political instability, yes, in that aspect, political instability is part of it.
Okay, thank you so much, Mr. Giri. You have mentioned very salient point from the social cultural barriers to the institutional barriers, mentioning infrastructural barriers, okay, talking about inadequate infrastructure. You mentioned financial literacy, which is also very interesting, the level of trust, and all that. You also mentioned the regulatory and bureaucratic barriers, and I find that very also very instructive because you said that we should find a way to strike a balance between under-regulation and over-regulation, because over-regulation could lead to stiffening of innovation and creativity, which will also affect the level of economic growth and development. Thank you so much for all of those intriguing, valuable contributions of yours on today's episode. Okay, I wish we could go on, but time will not permit for us to go further on this interesting and engaging topic. I always say it's a very robust topic because it concerns SMEs growth in developing economies, and because of the pivotal and crucial role that SMEs play in a nation. So on a final note, Mr. Giri, do you have any concluding thoughts for our listeners?
Yeah, I am. Let me just wrap it up. Let me just wrap it up with this. As we all know, in the global economy, in today's global economy, credit is not a luxury for SME. So it is luxury for SME. So it is something that is very important for them. So it is the oxygen that power productivity, competency, and growth. So if we are not getting it right in order to ensure that these SME heads they actually have access to all these things, that means we are killing them. So for us to have said it is the oxygen that power productivity, competitiveness, and growth. So for Nigeria and other developing nations to build globally competitive SME, financial institutions must go beyond just offering credit. So they need to do some certain things. That is, they need to make it to growth circle of the SMEs. So let me just stop from there, ma. Thanks for having me. I really appreciate.
Thank you so much, Mr. Agiri. I wish I could add more, but on this note, I'm not going to add any additional quote. But you said something very interesting, and that will be our closing quote on today's episode. Enterprises, rather, it is the oxygen that would power productivity, company sound, and insightful remark to end an interesting and robust episode. Thank you so much, Mr. Giri, from all of us at Amorgate. We are first, Mr. Giri will be getting married next weekend. We'll all be there to celebrate with him from Amorgate. And of course, we wish you beautiful, blissful married life. We say welcome to the club, okay, in advance to you. Thank you so much.
Yeah, thank you so much, ma. I really